I realized that, real estate is the wealth generation for 90% of Americans. And so why is it that we so focus on stock and bond? So I changed my mind there. And recently, I just started recently in the last few years to look into real estate.
Mai, welcome to the show today. How are you?
Hi, I'm fine, thank you. How are you, Michael?
I'm doing well. So give us a little background on yourself. You've done a lot of LP investing, but you've done a lot of GP investing yourself. So give us a little background on yourself.
Thank you. Yes, my name is Mai Duong. I'm a CPA. I currently live in Tampa Bay area with my husband. I started real estate investing a while ago, and the very first template that I use is the Michael Blank SCA. I invest in 2 deals as a limited partner, and after that, all of the deal I have done so far is general partners. So I participate in different roles in the process. For some, I'm the one who did the underwriting or negotiation. For others, I joined the team that already identified a deal. So I participate in 7 deals now. 4 have closed and 2 more to be closed. Actually, 3 more to be closed in the next few weeks.
That's amazing. Okay, so let's back it up a little bit here. So you start investing as an LP. The bigger question is most people invest in stocks, right? Mutual funds, ETFs. And I'm sure, you did the same thing for many, many years because everybody else around you does the same thing. And what happened to you where you started looking at alternative investment classes or asset classes? And why did you land on, what did you all look at? And then what did you end up investing in? And then why did you end up investing in multifamily?
Yes, thank you. So, like everybody else who works for corporate America, my investment in stock is in my 401k, right? So I put in the maximum, I do everything we was told to do. And I saw that it's fluctuate up and down. It doesn't really have any reason to that. And so I invest in single family home. I've done a few, and then I realized that in
Like
single family home.
let me stop you. Like a turnkey, you invested in turnkey, or did you actually buy a house? Or when you say you invest in single family, what did that look like?
We invest. We bought the property and we rent it out. So rental properties.
I see.
So very little work put into there because I'm a CPA, right? I push paper. I don't really have the skill to do renovation and things like that. Yeah. So I realized that real estate is the wealth generation for 90% of Americans. And so why is it that we so focus on stock and bond? So I changed my mind there. And I just started recently in the last few years to look into real estate. So I started out as everybody, I started out in single family, owned 3 little single family home. And then I say there have to be something better. And that is when I, found multifamily. And I asked for a suggestion for a template to use. And I was recommended to use Michael Black. So that's how I found your website. And then I look at the underwriting package and I use it. I sat through every training that you have there. I look through every videos in your website, and I think that's the best practice
Yeah,
because doing that, get me a good understanding.
you're
Yeah.
shining a light on the importance of underwriting deals, and the syndicated deal analyzer is what you're referring to. It's probably the most widely used underwriting tool for syndications, and you're right about that. Now, as an LP, let me ask you, I get this question a lot, is if I'm a passive investor, do I still need to know how to underwrite deals? Or the better question is, to what degree do I need to know how to underwrite deals?
Good question. Because I'm a conservative CPA, I have to understand whatever I put my money into. So I actually ask for the underwriting of the property that I invest in. However, I think for a layman who don't have finance accounting background, it might be difficult, right? So I think for a regular limited partner, maybe if they just got to understand the ARR, what is the ARR, the IRR, then that would be sufficient. Understand the multiplier, and the key thing is to understand how the assumption used in the underwriting affect the return, then that would be sufficient. They don't necessarily have to be the one who plug in the number and do the whole underwriting themselves, but understand how important the assumption can be to their return, because you just go into the P&L tab in Michael Blank template, right? And you change the P&L assumption in there, that can produce a totally different return. So when I help people understand underwriting, I focus to them to show them how a change in assumption up or down can change your return in a very significant way. Yeah.
You bring up a good point, which is the one of return and the assumptions behind it, and therefore with the level of risk. One of the things that always kills me is when you see packages from other syndicators and they have like this enormous return on there, and you're like, oh my gosh, how are these guys getting this return? Like, no investor is going to invest with me when they're going to invest with them because the return is higher. Now, of course, in this environment we're in right now, no one really cares about the return; they all care about the risk, and so it's always been there. Talk about what is, in your mind, what is a risk-adjusted return? In other words, when you look at an investment and someone says, oh my, you should look at the risk-adjusted return, like what does that mean to you?
Well, the risk-adjusted return will mean literally how you modify your return to adapt to the risk environment surrounding the properties, right? So in my mind, that is incorporating the risk related to the fluctuation in the market, the inflation, the risk increase. We, as you know, in the last 1.5 years, we have had 10 times of interest rate hike, the first time in history, right? And so with that, the most conservative estimation will go out of the door if you have to deal with interest rate that fluctuate that much. So right now we see that distress in the multifamily world and other type of property as well because of that. We also, because of the inflation, we also saw high insurance bill, right? Insurance bill can come, double compared to what you have before. And starting from January of this year, it is insurance across the country have increased. So all of that are the risks that we have to adjust for the underwriting right now, which is a year ago, those issues don't even exist. Yeah. So in my mind, that is what that means. Yeah.
How did you? Why did you get started on the GP side? So you were investing as an LP. You're like, this is pretty cool. I don't have to deal with tenants myself. That's pretty neat. Why did you decide to become a little more active? And then, so why? But then, how did you do it? What did you decide? What did you decide to do? How did you become active?
Yes, sir. So basically, investing as an LP is basically just a stepping stone for me to build a biography, to do deals as a general partner, because as you know, you will have to have massive capital to invest to earn the return from there significantly, right? So if you just put in 100,000 here, 100,000 there, it doesn't go really far. So my goal has always been to become a general partner. So investing in LP is a way for me to explore, to see how all the team build their project, how they put the team together, how they get the investor. So that is learning for me, so that I can emulate our deal toward that standard, if this is a good one. And then also through reading through the PPM, private placement memorandum, and the subscription and all of that, of a deal that I participate in at an LP, that give me the background to prepare to become the GP. And then when I become the GP, I did three things, which I think is normal for a general partner. The first one is to understand the underwriting process cold, right? So I have done more than 350 underwriting using your template, and sometimes other version of template that I saw out there as well. Get the underwriting down cold. Understand how to communicate with brokers, negotiate well, understand the risk, and then get a deal under contract. And then at that point, build enough, reach out and find people to do partnership with. So your goal of helping the professional to go away from to build well beyond the corporate job is something that resonates with me. So I am also partnering with people with the same background. All of my partners are typically corporate employee, or some are entrepreneurs, and that's how we have the same common background. Yeah.
So you talked about partnering a lot. So as you became as a GP, what was your role in the GP? What did you do? Like, what was your primary role?
Yes, I have performed all of the tasks in the partnership except for being the KP, key partner who signed up on the loan, because I don't have a big network yet to sign up on the loan, but I've done everything else: sourcing the deal, putting down money for risk capital, all of the tasks in your tax return, in your Michael Blank template, capital raising, asset management. The only task that I have not been able to do so far is to sign up on the loan. Yeah.
Well, that will surely come. How did you overcome the KP? So you don't say you don't have the net worth. Well, how did you solve that problem?
Oh, we partner with people who do. So we partner with a few friends and acquaintances who have large network and experience. Some of them have done a lot of investing over 20 years. They just did it as a JV, for example. They have never done a syndication. So they have the background. They have signed up on loan with Fannie, Freddie, some even with HUD loan, but they have not done it as a syndication. So now they partner with us, and so that we can do it together. So we have some partner with small networks, some partner with really big networks, and we join force to do it together.
All right.
Multifamily is a team sport. Yeah.
So you've been the lead GP then with some
No,
partners.
no, I have not. I have not. I was always go GP, not lead GP.
Okay. So,
Yeah.
but were you calling brokers and finding deals and making offers? Okay, that's so
Yeah,
you did do
yeah,
that. Okay.
yeah.
So
I did know that.
the one thing I hear a lot is, brokers aren't going to take me seriously for a variety of different reasons. I'm too old. I'm too young. I'm too this. I'm too that.
Mm.
How did you? Was that an issue for you? Being taken seriously, that fear, and if so, how did you overcome that?
You have excellent question. When I first started out, I was concerned because I didn't have background in commercial real estate. However, because I'm a CPA and I was in junior executive level in corporate America, my communication with brokers have been very smooth, easy. I did a lot of research and I prepare myself in advance. I prepare 25 questions to ask brokers. I practice, by myself, listen to other people, before I started out. So when I start out, I use some of the very good term to ask. Actually, some of the term I learned from you. Like you said, I remember the first video that I learned from you. You were proposing a question like, what is this property trade at? Right?
Ah,
Without being in the business, you would not know that kind of term, the vernacular, right, to use. So I actually do a lot of research, watch a lot of YouTube, watch everything in your website before I start talking. When I talk, I build good rapport with brokers. For other people who may not have the finance or accounting background or corporate background, my suggestion to them is just to do a lot of homework, practice. If they are in a mastermind, then follow the coach instruction, and then the more you do it, the better you will become. And practice with some small deal first. Practice with the deal that you don't plan to buy. Then you can make a lot of mistake and not worry about having a bad image with the broker. Yeah.
that's great advice. And what I'm hearing you say is, prepare, right? Prepare,
Okay.
practice, and then sometimes practice with brokers or deals or areas where you're not going to buy. We call it the throwaway market, where you're basically calling on brokers in a market you're not going to buy in. And I love that. And it sounds to me that you overcame some of your limiting beliefs or some of your disbeliefs simply by practicing and simply by doing. Is that a good summary?
Yes. Yes. Yeah.
So
With more knowledge and practice, you become more confident, and with that confidence, you can go from small property to big property. Practice first, and then get all of the question out, and then you can see that your question to the broker will be different, very different from one to another. Yeah, the way to ask question. I used to be an auditor with PricewaterhouseCoopers, so talking to people is not an issue. I can find out a lot from the question that the answer that was given to me. So personally, I don't see a problem, but I can understand that this can be a difficult challenge for a lot of people.
now, what about raising capital? Were you involved in raising capital at all, or did another partner do that?
Yes, I raise capital as well. I usually raise a minimum of $500,000 for each of the deal that we've done.
That's outstanding. Well, same thing. I mean, talk to us about, when you first started doing this. A lot of people are hung up on asking people for money, even friends and family. In fact, they say, I don't even want to ask friends and family. I don't want to beg them for money, or I've never done this, or I don't think I can ever do that. What did you go through when you started raising money? What was your mind like at the time?
Yeah, initially, I'll be honest, initially it was difficult because people didn't know me as the multifamily person. They know me
Right?
as a CPA auditor, right? So when I explain to people about the deal, I typically do the homework to make sure that I feel comfortable about the deal. I know the deal is good because you have to know that first. If I don't think that the deal is good, I cannot push it to anyone. Second, I train myself to go away from the mindset that you go ask people to do you a favor. You actually do them a favor because it's not difficult. It's not easy for them to go find this type of return. If they put money in the bank or in stock, right? You have seen that the stock crashed from March of 22 to now. I know a lot of friends who have their 401k cut by 1/3, right? So when I explain about the deal, I always show them my underwriting. I show them my assumption. I told them that every investment carry risk, right? So we will never have something that is guaranteed, but we have done our due diligence so that, the performance will be at least similar to what we told you. And this is a different type, a new type of investment. You don't have to be convinced by us. You can do your own research, figure out yourself, and we try to provide data to explain to the investor. For example, this is your typical return from stock and bond. This is how the market perform. This is how the deals perform, and things like that. When you first started out, people always ask you what was your portfolio, right? So it was very difficult for someone new. So the best way is to partner with people who have done this, and then learn from them, and then later on you build your confidence from there. Yeah.
Is that what you did? Did you partner with others who had more of a track record? Was that the lead GP?
Yes, our lead GP, the one who signed off on the loan, one had 30 years of experience, one had 25, one had 20 years. So with that, you learn a lot from just collaborating with them. Yeah.
Now, why would they bring someone like yourself on, right? How did you get them or convince them that partnering with you is a good idea?
Okay, great. Thank you. I share this, and I hope that this benefits new people too. Always think of yourself as someone who has some skill set, right? Because to be a successful GP, you got 5 or 6 tasks that you perform, right? So if you have the finance skill, accounting skill, you do the underwriting, you walk the property, you talk with the brokers, you negotiate, right? If you are the one who don't have that skill yet, but you have some money available, you can participate and help the team put down the deposit, right? Because that is also another task that you have to perform. If you can raise capital, that's another skill. And if you live nearby the property, you can also help with asset management. As a finance person, for me, budget, finance, operation come easy. So those are the areas that I can contribute to the team. I would know very little about renovation, for example. So that will be my weakness. Then I partner with people who have operation skill or renovation skill, and then you learn on the job. You learn on the job. Yeah.
Early on when you partner, and let's say you do have some skills, right? Should you expect compensation for this? And if so, what kind of compensation should you expect as a new partner? Or should you even work for free?
Yeah. So I heard a lot about non-compensated GP tasks or work for free to learn, right? My understanding is that it is illegal to be a partner just to raise capital, right? So that the SEC doesn't want us to do that. So if you are a partner, you want to be a full-fledged partner. For a new person, it is hard to push for that, right? So typically, you will want to help with helping with due diligence, helping with asset management on top of capital raising, so that you can be given some percentage of other tasks. If you are in a deal that the experienced people don't want to give you the percentage related to those tasks, that you have to, ask yourself, is it something that I want to join? Is it normal? Is it the norm, right? If you consider all of that and you still want to do, then I think it's still worth it. When I first started out, I asked the experienced people, give me the deal that you want to do. I will do several underwriting for you because I'm doing it to learn it myself and to build goodwill. So I don't mind that. But when you have been through and have some experience and you still being approached and given, zero com task, then I don't think it's fair, right? So I think we have to strike a balance. A new person should not expect to have the moon, but it should not be strict unfair either. So I think in this market, in this kind of industry, I see a lot of new people having to accept terms that really disadvantages to them because the knowledge is not being shared, and that is one of the reasons why I like your spreadsheet, your template, because I point people right into the top return, in which they can see the general partner worksheet, and they can know from day one, that is how the general partner is being designed. There are people who may have been doing this for a long time, but they never see that worksheet. So they may constant contributing in a project, and they just take whatever given to them. They didn't know how and where the percentage come from or how to compute it, and I found out as a surprise. Yeah, so yeah.
Yeah, it gives you a methodology for coming up with compensation or equity for each of the partners based on the roles and what they're doing in the GP. Now,
Yeah.
I remember earlier you said that you were closing, or you have closed and are in the process of closing a bunch of deals. Okay, so let's talk about that, because, and I get this all the time, but specifically now, people are like, oh no, nothing penciled. Deals can't be done anymore. Now, explain to us how in the world you're getting deals done right now.
Yeah, okay. I can share with you. I am a principal with Sunbelt Equity Group. So our team typically focus in the Sunbelt state. So far we have property in Texas, Florida, and Georgia, right? So I give an example. We have a deal right now that we bought a property in Dallas, and the property and the price per unit is 86,000. And it's in one of the top place in Dallas. It's a value add property for sure. So we will put in some effort to improve it, but the location is great. So
that price per unit, 86,000. So what do you think it was a year ago?
A year ago, it would, of course, I guess because a year ago the interest rate has been 3.8, 3.7, right? So deal would have been very different before. Now the purchase, with the purchase price, we can still make, the deal is still penciled in because of the renovation work that we do, but the interest rate that we take is 5.4.
Yeah.
So you can see the big difference there, right? 3.75 versus 5.4. Of course, the price is being influenced. Yeah, but good deals are always out there. People sell for different reasons.
Why did this particular seller sell? Did they have to sell? Did they want to sell? They could have just held on. But why are people selling right now when the prices are down?
Yeah, so you'll be surprised. People sell for all kinds of reasons. The very first one that I saw is the partnership have a 5 years, 7 years plan, and now it's due. They have to sell to pay money to the investor. That's the first one. That is the structure sales. Then they also have the market driven sales, because years ago they took loan, bridge loan or something, and they have a floating rate. And now the floating rate come due and they have to pay. Now they have to pay with the floating rate, which is much higher. And so they barely produce enough to pay for that, right? So that's another one that they have to sell. And then you always have personal reasons, people retiring or divorce, the proceeding, they have to do it. So there's always people like that. Of course, the market right now is not very friendly to the sellers. So unless they have some problem or they already run it for several years, they already make the money, they already refi the property, then they're safe. Then now they can just, they can afford to sell, not having a lot of loss. So I have seen both. I have seen property that have to be sold, and we are told that the seller are market sellers. We also saw that a property doesn't have any problem, but the owner owned it for 7, 8 years, and now they want to sell. Yeah.
Yeah, they've already made their money. And so like, I know prices are down 10, 15%, but I already made my money and we're going to sell it anyway. And the other class of sellers are the ones who have to sell.
Yeah.
And, okay. So how do you respond to someone that says there's no deals out there?
That's not true. That's not true. That's not true. Yes. And also a little trick that I want to share with people. You may hear very generic description about why a property is being sold, right? But focus in the T12, because when the seller, the brokers give you the financial, the trailing 12 months, right there, right under the NOI, you will see a line for interest expense or interest payment, right? If you see an interest that goes from 38,000 a month to 108, then that seller is a market seller, even though they didn't tell you, right? So there's a lot of things that you can find out from the financial. And if you read the financial the way I read it, I was an auditor for 6 years with PricewaterhouseCoopers. I can find fraud just by looking at the number. So if you pay attention to that, you can find a lot of unspoken code word, and then you can, base your negotiation on that. Yeah.
So what does that tell you when you see the interest or expense go up like that? What is that? What clue is that?
The clue is that they are in a floating rate arrangement.
Okay.
And so sometimes they have that interest expense there, and then they do have a line called income cap, interest cap. So that interest cap offset it a little bit, but it's still a big number. So you can see that, hey, this seller have to get out because now they have to deal with this kind of debt service that they didn't have to do it before. So we know without saying that they have to sell. Yeah.
So you have some leverage over them. It's like a 1031 exchange. They have to sell before that cap comes due. From a seller's perspective, the risk is very great because if you don't perform and they have to renew their cap, they can't afford to. Now they're in a default situation. So and I think, I don't know if you see it that way, but I think we're going to see a lot of distress coming from that in the market, which is going to be great opportunity for all of us. But how have you adjusted your underwriting? Again, a lot of people say, oh, this is an awful market to buy in. And I say, it's always an awful market. The difference is, how do you adjust your underwriting? And so how have you had to adjust your underwriting over the last year or so?
Yes, I adjust my underwriting for 5 things. The first one is I adjust for the interest rate for sure. In the past, when I first started out doing this, it was 3.75, and I didn't have to put in a cushion, right? Now I put in whatever rate that I was quote, I put in a cushion of 0.5 point. That's the first one that I adjust. The second thing that I adjust is I actually go and get insurance indication, or in some case, with some very kind insurance agent, I actually got a case where I got a insurance policy written, even though we have not gone into the stage of PSA yet. She was able to give me an insurance policy underwritten, and it's 3 times more than the number in the T12. So that's the second one that I underwrite for to adjust for risk. The third one is the property tax. We have to adjust for that with an estimated purchase price. I actually got the tax bill, understand how the bill was calculated, and apply the new purchase price, the new assessed value, to come up with the actual tax number instead of an estimation. So that's the third one. The number 4 that I adjust is that I adjust operating reserve. In the past, we usually use your guidance, $1,000 a unit, right, for operating reserve. For a very big property, 300, 400 units, it may be sufficient, but for a small one, it may not. So I compare to the operating expense, and if that amount is less than 2 months of operating expense, then I will use the 2 months of operating expense. In some case, I even use 4 months of operating expense. However, I apply those adjustments with professional judgment. I don't just apply it for no reason. If a property is struggling and there are a lot of fluctuation thing that I see in the OPEX, right, then I want to adjust for that. But if a property is stable, 97% occupancy and all of that, then we don't have to just book a very big operating reserve for nothing, right? The fourth one that I want to be sure is that I come up with a very detailed renovation budget. I have it spelled down, exterior, interior, curb appeal, whatever cost to come up with. So I usually drop in a tab in the Excel spreadsheet. So maybe this is a suggestion for you, Michael. If you can create another tab in there to give a template of a renovation, you will have a lot of new rookie people to have an idea of how to put in the renovation there. And then they just link that number from the renovation to the scenario to do the analysis. So if you do that, then you cover for the 4 major items related to the properties, right? So interest, cushion, insurance quote or indication, property tax recalculated, operating reserve, renovation. If we are solid on those 5 items, we're doing fine. Yeah.
What about rent projections?
Rent projection. Oh, that's a good point. Rent projection. I am right now in Tampa, right? Tampa have had 20+% of rent growth in the last 2-3 years. That is not sustainable anymore. So now if you look into CoStar report, you start to see rent growth be negative, right? So rent growth being negative is something that we have to put into consideration. So we put the rent growth very little. We usually use 3% of rent growth and 2% expense growth accelerator. Sometimes I do 2, yeah, because it's already hit the top for a long time now. However, it's very city from city though. And property by property, I give you an example. We was looking at a property in Clearwater, and it's already $3 per square feet. And we know that there's a lot of property in the surrounding area that is top and only $2.6 per square feet. With that kind of supply, we cannot push for the property that we look at. We cannot push for higher growth because it will be unrealistic, even though that's what the broker or the management told us, because we compare. So the key is to have as much data as you can, because data is your strength. Yeah.
Yeah, that's very good. What's your biggest challenge right now?
The biggest challenge, I guess, is to inspire confidence in the investors, because the investor, they are scared, right? They do want to invest because they see their stock portfolio go down, their 401k is in bad shape. But it's difficult to inspire confidence in them because of the market, the way that the market works. Yeah.
How can people connect with you and find out more about you?
Oh, thank you. I am a partner with Sunbelt Equity Group. My email is mai@sunbeltequitygroup.com, and my phone number is 425-535-5223.
Outstanding. Well, this has been a great jam session, Mai. Really, really enjoyed it. And thank you for talking about a lot of the objections that people just think about all the time, and you've addressed them very well. And it's clear you're getting deals done. So it's been super awesome. Thanks for being on the show today.
Thank you. Thank you. I've been learning a lot from you, Michael. Thank you for creating all of this and the community.